You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's going on in the world of futures options? Well, I suppose we could find out together. That is what the show is all about. After all, yes, it is time for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from the optionsinsider.com, as well as from the network upon which so many of you are just mainlining these days. Keep it up. We'll shoulder the bandwidth bills. It's not a bad problem to have at the end of the day. Of course, if you like what you hear, you want to help defray some of those bandwidth bills with a like, a comment, a rating, a review, a star, whatever your platform lets you do. It does help new people discover the show. And of course, you want to go above and beyond, get new content in your ear holes, get access to our exclusive Pro podcast feed, exclusive shows, all that goodness. Pro Trading Crate, congratulations to Meets, one of our longtime members, just won a Pro Trading Crate just yesterday. So a lot of fun to be had there. You want to get your name in the hat to win one of those Pro Trading Crates? TheOptionsinsider.com/pro. The place to go to learn more. As we go out to see who's joining us on the old CME hot seat today, I'm pleased to welcome back our old friend, Mr. Russell Rhoads from the Kelley School of Business, a.k.a. the once future and now present Dr. Vix. He does have the paper. You can check him out on Twitter if you are so inclined. Mr. Rhoads, welcome back to TWIFO, sir.
I'm always very happy to be here, and it is a hot seat. I'm sitting out in the backyard at Rhoads Manor. It's hot out here.
A little outdoor TWIFO action. That's so you can keep an eye on the corn crop as you're recording with us. Live updates, sir?
I've got a little cannabis crop in the back corner of my yard, but otherwise I'm all good as far as
Let's just mention that on the air these days. That's where our
in Illinois.
That's where our laws have evolved to now. I love it, Mr. Rhoads. By the way, you should pin on your Twitter just that photo of you holding up the document, just so any doubters can see that you are indeed the once future and now present Dr. Vixer. As we keep on rolling, it's time to see what the doubters and everyone else can see out there in the futures options markets. It is time for the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report, the portion of the show where we break down what's lighting it up to the light side and to the dark side. Another interesting week as we're looking back, listeners. Right now, looking at the full report, it was about, I would say, 60-40 green over red. Maybe if we racked it now with some of the equities turning dark side, maybe it'd be closer to 50-50. But an intriguing week nonetheless. You folks, as always, can see this report for yourselves if you follow CME Group on Twitter or if you follow us on Twitter. We both tweeted out right before showtime. That's pretty much the only premium Bantix report you can get access to. The rest of them, bantix.com, BANTIX.com. And then sign up for the free trial. You can get all the cool stuff. I mean, we do the TWIFO reports here. That's really just the tip of the iceberg of all the crazy stuff they have cooking. And Nick's always hitting me up with new stuff they have cooking all the time. So a lot of cool stuff to check out. Check out the free trial if you haven't already. Bantix.com, BANTIX.com, the place to go. As we go around the horn, Mr. Rhoads, an intriguing week, a not quite 50-50 week, but pretty darn close. Where should we begin our journey this week, sir?
Let's go to the light side because there's some big light side bars.
All right, there are some
graphic.
Big light side bars indeed. So to the light side we go. Number 5, kicking things off in palladium, listeners, off in the metals. A little over 3%, 3.03% to the upside. Before you get all hot and bothered, we're going to talk some heavy palladium on the show this week. 80 contracts on the tape right now, so probably not going to head out there. Number 4, off to energy. It is heating oil, up 3.07%. It was a number 2 in the same direction, up 5.25% last week, so a good couple of weeks for heating oil. Before the Once and Future Dr. Vix gets all hot and bothered about heating oil, not exactly a banger. It's not nothing either. It's kind of one of those tweener names. 7,300 contracts on the tape right now. So I suppose we could talk a little bit of heating oil, but there isn't a ton to parse out there. Keeping it in energy for number 3, it's RBOB, up 4.75%. Again, before you ask, listeners, 631 contracts on the tape this week. So probably not going to head out to RBOB. Number 2, we're going off to the ags. It is Chicago wheat, up nearly 6% this week, 5.9%. It was number 1 in the other direction last week, off nearly 12%. So getting roughly half of that back here on the week. You don't need me to break down how much paper goes up in Chicago wheat. There's a lot, so we could certainly hang our hat out there. And then the number 1 light side mover this week, listeners, it's a banger. It's our biggest percentage mover on the week as well. It is nat gas, up 8.77%. And again, you don't need me to tell you how much paper goes up in nat gas, but spoiler alert, it's a lot and looking pretty robust this week as well. So probably a good chance nat gas going to make it back on the list. After taking a little bit of a hiatus, we were talking more about WTI and some other things in the energy space, but now nat gas may be coming back on the radar. Now to the dark side we go. Number 5, back to the ags, in particular the livestock. It's lean hogs, off 1.95%. And again, lean hogs, kind of a sneaky active contract. 60,000 contracts on the tape right now. So who knows? That may make the Once and Future Dr. Vix talk some lean hogs today. Wouldn't that be fun? You can add that to his paper, Dr. Vix and livestock. Number 4, it's oats, off about 2.5%. And again, before you ask, 14 contracts, listeners, so probably not heading there. Number 3, these little S&P E-mini sectors sneaking onto our radar a lot more often. Again, no options to speak of yet, but the future's starting to catch a little bit of fire out there. This week, it is the technology sector coming on our radar. Number 3 to the dark side, off about 2.59%. Number 2, back to the metals, it is copper, off 3.14%, and a decently active contract, 20,000 contracts. We've seen it do more, but it's not nothing out there. And the number 1 dark side mover, staying in the metals, listeners, it is silver, off 3.66%. And again, a pretty active week out there, about 32,000 contracts. So a good chance we could sink our teeth, proverbially at least. Might require a dentist visit afterwards, but we could sink our teeth into silver as well. All right, a lot to unpack, but it looks like our biggest percentage mover is in the energy sector. It's nat gas. I think we're going to head out there first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, to the wonderful world of energy we go. You know where to go to find this, cmegroup.com/TWIFO, TWIFO. Once you're there, you'll see that product drop down, go in asset class down 3 slots to energy. Then in product family, you're going to go down 2 more slots to nat gas, and that's where we're hanging out right now. Coming into showtime's at a 275, up a little over 18 cents just this week. That puts it up a little over 7%. Of course, you go back to the end of our show last week, up nearly 9%. So a little bit of a banger week here for nat gas. Mr. Rhoads, it's been fascinating to watch out there, all this talk about nat gas. It seemed like maybe we were settling into a little bit of a range. It seemed like maybe for the near term, some of the interest was to the downside, which we had Carly on recently and others, and that's hard to get excited about the 2 or even the 2 half puts in nat gas. Doesn't really excite you. It doesn't really stir the blood that's out there. So not a lot of excitement in those. But this week, it seems like, once again, the action was to the upside, sir. What was catching your eye out there in our frequent offender of nat gas this week, sir?
It's kind of interesting that we got a dip, and it looks like the dip may have brought out some call buyers when you just look at the 25 delta skew. I don't know if you're seeing the same thing that I am around that. I find it interesting that the most active seem to be a whole bunch of puts. As far as volume goes, they are allowed to sell puts when they think it's going higher. So I'm digging around on the block trades right now and just seeing if a bunch of that put volume might be bullish put volume. How's that? And following it to the upside.
Intriguing stuff. A lot of paper going up in nat gas this week, listeners. Usually we see 400, maybe 450 on a decently active week. This week, 724,000 contracts on the tape already. So this upside move maybe catches some people by surprise, certainly catching the options markets moving and shaking this week. Lighting things up out there this week. We got, like we said, about 724,000. Of that, 38% going up in the October contract that has 47 days to go. What a refreshing thing to talk about 47-day options as opposed to 1 day or 2 day contracts. It's nice. It is a little nice. I will say that. That future going out in October, 286 right now. So a little over a dime higher than that front set future, which is going out in about 18 days there. The vol, what is the vol right now in October nat gas? It's about a 60, up about 2.5 points. So looking fairly rich, especially when you consider most of the other asset classes we're going to talk about here on the show can't even sniff a 60. So nat gas probably going to hold the crown out there for vol. I'm hard-pressed to think of another asset class. I mean, Bitcoin has been up there in the past. Bitcoin vol is anemic right now. It's in the mid to low 30s. So not a lot cooking out there that other asset classes that can really match a 60. And again, nat gas has been much higher. It's been triple digits before. So a 60 is actually fairly anemic for nat gas, but it's still the highest on the perch, the biggest dog on the block here. Let's go look at the skew that Mr. Rhoads was just talking about. Last week, the puts were leading the dance, about 2% bid. The calls, about 1.2% bid. So a little bit of a slight smile in both directions. The market couldn't decide which way it wanted to go. This week, it's all puts all the time. The puts getting jacked up to 5.5% bid. The calls, 1.8% offered. So calls getting a little bit of a discount. The puts getting bid, though, which is kind of interesting. Maybe leaning some credence to Mr. Rhoads' point that they are buying some of these puts out there. Let's go dig in and see what kind of paper we saw. The big dog this week, listeners, the 2.5 puts in October, leading the dance by a country mile, actually just ticked over 50,000. It's about 50,000 exactly. 50,062 of the 2.5 puts going up this week. The lion's share of that actually going up today, listeners, 20,000 and change going up today. 16,000 yesterday, so folks were bailing on those yesterday. About 10,000 on Monday, paper open in there, and 3,700 on Tuesday. Again, I haven't had a chance to dig into the block trades to know for sure, but the fact that these puts are getting big, some of that could just be the skew rotation, listeners. We're rallying. So in those scenarios, puts tend to get bid, calls tend to get a little bit offers. There could be some of that at work, but given the fact that 50,000 of these 2.5 puts have traded, probably a little bit of that action is bearing fruit as well. The 2 puts right behind it, 36,000 of those for our number 2 most active contract. 13,000 of those going up today, and then about 9,000 on Wednesday, 6,300 on Monday, 7,300 on Tuesday. Unlike the 2.5 puts, it was pretty much closing all week long. Folks bailing on those bad boys all week long, which again, we did kind of rally away from that strike all week. So makes some sense. Some folks would be getting the hell out of Dodge on the 2 puts. And then if you wanted a little bit nearer dated paper, right behind it, we have the 2.5 puts going out in September. So about 18 days to go there. Those did about 33, almost 34,000 contracts this week. The big day for those, not today, but Monday. Nearly 14,000 going up on Monday, mostly closing there. About 8,000 on Wednesday, 6,500 on Tuesday, 5,000 today. It looks like mostly opening the rest of the week. So these 2.5 puts do still have some attraction to some folks out there, even though it's hard to get super excited about either buying or really selling a 2.5 put in nat gas these days. Mr. Rhoads, any of that paper come as a surprise to you? Have you managed to uncover any surprising nuggets there in the block trades?
A little bit of a surprising nugget. I've got a new toy that I keep playing with, and the puts are kind of bid going out to November. And then when you look at December, January, et cetera, you start to see the calls kind of bid. So, I assume that there is definitely some seasonality involved in that one, where, are we all going to be freezing, or are we going to freeze our things off with a lack of nat gas in December, January, and February this coming year? I would assume that skew looking like that is just a seasonal thing that we're used to seeing, and not an indication that the market's got an opinion one way or another late this year, early next year with respect to where natural gas is going.
There's always a bit of a calendar strip going up every week, listeners. This week, it's the 6th strike going up, starting, looks like in March and going all the way out to October of next year. 585 times, that is the magic number this week. The numbers, the strikes, they're always a little bit head-scratching on these, but that is this week's calendar strip. Read into it what you will. Since we're hanging out in energy, and Mr. Rhoads always asks me about this one, and it's doing 7,000 contracts this week, I suppose we can take a quick sojourn into heating oil. Scroll down from nat gas into refined products, listeners. Then click on heating oil. That's how you'll find that one out there right now. You might be saying to yourself, where is heating oil trading right now? And I would be saying that same thing if my system wanted to play ball with me. It looks like we're going a little bit slow all of a sudden here on heating oil. So maybe you know what? Maybe we'll table the heating oil conversation until my system wants to catch up. But let's try one more time. Here we go. Heating oil. I just had it up a few minutes ago, so I know it exists. I know it works. But looks like we're not going to make that handshake today, listeners. So instead, you know what? Let's keep on rolling. Mr. Rhoads, you get to choose next where we hang out next, sir. You know what? It just came up before it goes away. My heating oil finally coming up, listeners. 7,300 contracts on the tape. Of that, 58% going away in the October contract. By the way, heating oil right now trading at a $3.15 in that front set future. That's $3.15 if you don't follow it, listeners. I know most of you probably don't. And it's the 310 calls going away in 47 days that are leading the dance, going up nearly 2,000 times. 1,777, 775 on Tuesday, 502 on Wednesday, 500 today. Looks like a 310, 340 vertical going up on Wednesday and today 500 times. Seems like closing on the 310s and opening on the 340s, so maybe a bit of a roll. Again, that makes some sense. We are hanging out at the 312 level and the 315 level in that front future, so it makes some sense that maybe you might be rolling now that we're through that strike. And what is the vol right now in heating oil? It's about a 32 3/4, up about 1 3/4 points. So there you go, Mr. Rhoads, your much requested check-in on heating oil. What say you, sir?
I love heating oil. That's all I have to. And why in the world would we be talking about heating oil when there's, a huge heat wave going on? The planet is warmer than it's ever been. Well, that's because airlines use heating oil futures to hedge their costs, believe it or not.
It's like we lost you there at the end, sir. What were you saying? You said the correlation?
All right. I was just saying that I like heating oil. Nobody understands why we like heating oil in the summer. And I was just explaining that it's a contract that a lot of airlines really actually use to hedge some of their energy exposure, because there's and I still don't. I got to ask somebody, and so I sound more informed when I talk about this. But it's the closest contract price wise to jet fuel costs. So the airlines like to use the heating oil future, and you're thinking, why in the world would anybody care about heating oil when it's really warm out like it is right now? Well, that's because it's used for things that you wouldn't expect.
That's why we bring the once in future Dr. Vix onto this show, listeners. Not just for his magical garden, but for little nuggets like this, Mr. Rhoads. All right, Mr. Rhoads, outside of the energy sector, where should we head next, sir?
Oh, let's go to can we go to wheat for just a second? I know I drive you nuts when I do the ags. I saw something kind of interesting with wheat.
All right, then, listeners, to the world of the ags we go.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, you know where to go to find the ags. Go into that drop down, pop out of energy, go all the way up to the top. It is an alpha order list after all. And then you're going to go in the product family to grains and oil seeds. And then from there, one down, you will find SRW wheat, a.k.a. Chicago wheat. That's our stomping ground for this week. Number 2 on our light side movers, up about 5.9% since our show last week. Of course, this week, it was like most of that move actually came, interestingly enough, last week, because this week it's only up about 0.75%. So a big pop towards the end of the week last week. Not so much going on out there this week. Decent paper, though, 116,000 contracts on the tape for Chicago wheat. Mr. Rhoads, sir, a banger week in wheat, at least at the end of our show last week. What's catching your eye out there?
Well, and what's interesting is I just see a ton of collars, which makes me think that, we got that pop up and now we've just been messing around a bit in kind of a range. And it looks like there's some traders out there that think we might see wheat roll over a bit. For instance, the October contract, I always get the V and the X mixed up on the months. But the October contract, somebody 550 times sold the 720 calls and bought the 630 puts for no credit or debit. So, yeah, and typically we don't see collars in these markets. We see collars in stocks and equities and things like that. But I see that one. I see a September 600, 700 collar that went off today as well, a couple hundred times. They did take in a little bit less for the 700 call than they paid for the 600 put. And then there was one more early this morning where was that? It's actually a trade from yesterday, and it looks like it might be the same entity that did the 630 720, because there's a 690 720 from the day before that's about the exact same size. So I just found it interesting that a bunch of collars were popping up.
Funny you should mention that, because I was looking at the skew and my first thought was, this is looking like pretty favorable for collars, and you happen to bring that up. Because we do see collars go up in ags, but we've seen them in soybeans before, we see them now in wheat, but it's usually only at these moments when the skew is ridiculously favorable. Like right now we have, again, 117,000 contracts on the tape, 55% of that going up in the September contract. It has about 15 days to go. Last week, listeners, the puts in September wheat were 11.9% cheap, and the calls 27.3% bid, Mr. Rhoads. So that's pretty favorable time to put on a collar. You get that put for nothing. Yeah. You could sell that call. You probably do that collar for a nice credit. So I don't blame people for seeing this and wanting to leg into some collars. We have seen them in the past in soybeans a lot as well. When the skew gets this favorable, seems like it's now collar season in Chicago wheat, listeners. By the way, Chicago wheat 637 3/4 where it's hanging out right now, up only about 5 handles since Monday. So again, most of that move coming at the tail end of last week. What is the vol right now in Chicago wheat? It's respectable. It's coming in a little bit. It's 38 and about a quarter, down about 3 3/4 points. So it was in the 40s last week. Like we said, nat gas probably going to hold the crown again this week for the highest vol product we're going to talk about. Skew-wise, like we said, this skew is just bonkers. 12% cheaper the puts, the calls, 27.3% bid last week. Imagine if you can get that in an equity, listeners. Imagine the kinds of collars you could do. For a little while, we did see some of that in some of the crazy meme stock times, which, spoiler alert, could lead to our question of the week a little bit later on in the show. This week, that skew has come back down to earth somewhat. The puts are 7.7% cheap. The calls 11.7% bid. So it still is favorable for a collar, just not quite as extreme as it was this time last week. If you want some decent collar setups, if you go out to the November contract, those calls out there are about 14.7% bid and the puts 10.1% cheap. So there are still some collar setups to be found here. You go a little bit farther out, listen, my goodness. If you want to go long-term collar, which is not usually the way I like to do it. If you wanted to go to May of 2024, listeners, the puts last week, actually the puts were bid, 8.1% bid, but the calls 31.6% bid. So you could certainly overwrite the hell out of the calls at least and maybe wait on the puts for a little while. But intriguing stuff. Let's get out to the hot trades. Mr. Rhoads is talking about some collars. Seems like there's a bunch of 5,000 lots going up here this week, including in the par calls, the 700 calls in September with 15 days to go. I say 5,000 lots. I mean really total of 5,000 contracts. That's exactly how many of the 700s traded this week. Are pretty much active every day this week. 1,800 on Monday, 1,500 on Wednesday, 1,000 today, a little under 1,000 on Tuesday. Looks like closing most of the week. So folks bailing on these 700 calls with about a little over 2 weeks to go. Right behind it, we also had the 800, so another par call. These are in December, going up about 5,000 times as well. Again, pretty active all week long, even though the big day for these was Monday, 3,600. It's like folks bailing on them there. And then about 1,000 on Wednesday, and then a couple hundred today and Tuesday. So intriguing stuff on the 800s. And then right behind it, if those are not out of the money enough for you listeners, let's go out to the October 9.5s, the October 950s, doing 4,200 contracts. 3,000 roughly going up yesterday. Looks like there was a 9.5, 10.5, 1,000 butterfly going up pretty much 1,500 by 3,000 times. Opening on all of it. So it's the 950, 1050, 1,000 butterfly. Intriguing stuff. Again, 1,500 by 3,000 times. Looks like for fun, they put on an extra 1,250 of the 9.5s today. So a total of about 4,200 of those have traded today. Unless they decided to leg out of some of those. I don't know. Weird paper there in those 950s this week. But that future, by the way, listeners, at a 663 3/4 with about 43 days to go. So a lot of funky stuff, a lot of paper out here in Chicago wheat. And also, listeners, if you're kind of tired of the anemic vol and equities and you're looking for a little bit different skew setup, you could do worse than maybe legging into some of these collars out here and some of these ags because they are looking pretty favorable. Anything else catching your eye in the land of Chicago wheat, sir?
Well, I just you kind of threw a softball of something that I had in the back of my mind that I was going to rant on for a second, which is, all the guys that call themselves vol traders, I would say 85-90% of them do nothing but vol in the equity space. And they're really missing a lot of opportunities. I think that every time you invite me on this show, because you just see how much more dynamic skew wise and implied volatility wise the commodity option markets are compared to the equity option markets. I mean, there's something really nice about knowing that if the S&P 500 sells off, most likely VIX is going to go up. You don't quite know what might happen vol-wise when, wheat goes up a bunch very quickly. It looks like a lot of people were scared that it was going to keep going up. And then when it starts to top out, they're still giving you an opportunity to harvest some volatility risk premium in the calls. And then if we get a sell-off, we get near support. You see the same thing on the put side. And it boggles me with some of the outreaches that I'm involved in that, how few vol managers are looking at the listed options on futures that CME Group's got. Because if you can't find a vol trade to do at least once a week in that market, you need to go do something else professionally.
Well said, sir. Speaking of doing something else, we're going to move on in the Ags complex. Going to stay in it, though, listeners, because there is another banger, as you mentioned, lurking underneath in the dark, seedy underbelly of the ag space. We're going to scroll down to livestock. Yes, I said it, listeners. We're going to hit lean hogs before we roll on out of ags because they're just putting up bananas numbers. 60,000 contracts on the tape this week for lean hogs. Man, we first started doing the show in its initial incarnation, the long and short of futures options, many years ago. Lean hogs were very much an afterthought from an options perspective. A few thousand contracts here or there on a busy week, but we were nowhere near sniffing 60,000 contracts. So a very different beast these days. I mean, you're talking 2x silver going up in lean hogs right now. You're talking 3x copper. You're talking 1,000,000x oats or palladium. And heating oil. You're talking about 8x out there. I mean, it's just it's impressive numbers here. Where are lean hogs trading right now? Well, it's kind of a bit of a tale of two futures here, listeners. The front future that's expiring in 3 days, listeners. So the August future is trading at a 101.60. And then you go out to the October future that's expiring in 64 days. That's trading at about an 80.5. And then we kind of drift down a little bit lower from there. So an intriguing term structure out here in lean hogs. These puts, by the way, if you were wondering, listeners, the vol, what is the vol in lean hogs? 7.25 in that front contract. Again, it's going away in 4 days. So take these numbers with a huge grain of salt. But that said, a week ago, the puts in lean hogs were 176.4% bid. Again, you're talking from a 7.25 level, but still intriguing stuff nonetheless, and 22% bid worth of calls. So you got some interesting skew action out here in lean hogs. Right now, that 60,000 contracts, 36% of that coming in the October contract that has about 64 days to go. So we're going to head out there. The vol there, a little bit richer. Again, this front contract kind of wonky. This October contract, the vol about a 29, off about half a point this week. So respectable vol levels. Again, considering everything else we're talking about, VIX languishing in the teens, all the other products we're talking about can't even sniff 30. Lean hogs looking respectable at about a 29 and change. Skew-wise, not quite as absurd in the October contract as it was in the contract going away in a few days here. The puts, 3.8% bid last week. The call is kind of flat. This week, the puts nearly 8% bid, and the calls nearly 7% offered. So looking like a little bit of a mini equity skew popping in here in lean hogs. And let's see what was leading the dance out here in this impressive 60,000 contract week. It's kind of a bit of a tie. It's actually going out to next year. The Feb 80 puts doing 3,200 contracts. Looks like the big day for those. 2,100 on Monday, about 1,000 today, the rest scattered throughout the week. Mostly opening on those 80 puts. And then right behind it, we have almost 3,000 of the 78 puts in October going up this week. Kind of the same deal. Most of that paper on Monday, about half of it, 1,500 on Monday, 1,000 on Wednesday, the rest scattered throughout the week. Mostly opening earlier in the week. Looks like closing later on in the week. Doesn't seem to be a roll, though. It just seems to be related paper going up out there. And then right behind it, we have 2,000 of the 80 puts also going out in October. These 1,300 of those traded on Monday, and again, 500 on Tuesday. So again, a lot of front-loaded paper earlier in the week, mostly opening there. Let's jump around a little bit. Let's go to some 102 calls that are expiring in 4 days. They traded 1,500 times as well. And we're at 101.60, so these are pretty much at the money, including 800, a little over half going up today. So intriguing stuff. Actually, some paper to sink your teeth into out here. This used to be a trade by appointment contract, Mr. Rhoads, and these days looking a little bit more action-packed. It still is a product I wouldn't recommend for the beginner options trader, but intriguing. If you're a little bit savvier, Mr. Rhoads, there is some liquidity out here to make some hay of. What do you think?
There is, and I when I was a wee lad with a terrible Southern accent and first moved to Chicago in the early 90s, the first place they stuck me was in the hog pit, where a lot of nefarious guys were staring at paper when it would sneak in.
So they really loved you to throw you into the hogs right off the bat.
Yeah, well, they did. Yeah, I was hogs and cattles for about 8 weeks, and that was it. And then I was over to Eurodollars. Yeah, it was hard staying awake, but it was easy coming in hungover when you were in the meets. Couldn't pull that in the Eurodollars. But you see you see the puts bid even farther out. And all of those trades, as you went along and talked about those trades, I looked at my little Bloomberg machine and checked the block trades. They were all purchases. So that and you can see that because the put implied vol is higher than the call implied vol. So we've got the current hog price. We've got 101 right now, and then the next contract, which is October, down at 80. It looks like they're expecting even lower levels for some of these farther dated contracts once we get past once we get the August contract off the board and everything looks normal and everything's in the 70s, 80s, and 90s.
All right, Mr. Rhoads, I force you to go back to your roots and talk about some lean hogs. Now the next choice is yours, sir. Where should we head next?
No, I'm gonna get anywhere that you prefer because I honestly do not have a preference. And I would rather not just blurt something out there that I don't have a preference.
Well, tell you what.
Something I sort of interested in, but I don't want to step on toes.
Tell you what, since you are the once and future Dr. Vix, and equities having an interesting whipsaw day out there, and we do have the technology sector on number 3 to the dark side off about 2.6%. I suppose we can head out into a little bit of the old equities next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the wonderful world, the whipsaw-y world of equities. And man, what a day it's been already today, listeners. Of course, we're coming into the tail end of earnings season, but still a lot of big names popping off, Disney moving stuff last night. Of course, we had CPI numbers before the bell this morning, and it seemed like the market, like what it heard early on, we rallied pretty high, got up to around 45 and a quarter in the S&P. Then they came for it, just crushed it back down. We're down 50 handles from that level to about 44 and 3/4. That's where we are right now, up about 0.25%. We actually did dip red earlier in the session during our option block show. We got down to about 44.59 or so before bouncing. So it's been a crazy whipsaw-y kind of day. We're rallying, we're selling off, we're bouncing again off the rally. Now it seems like we're kind of treading water. Mr. Rhoads, a lot going on in the vol space as well today. What's catching your eye in a very whipsaw-y week in the markets and in vol, sir?
Well, it continues to be, and I know this is a little off track, but last time you had me on, I talked about this, and it's still doing what it was doing when I talked to you last time, which is you got VIX continuing to trend higher, hadn't made a new low since late June, and I felt like it was somewhat of a precursor that we needed to be worried about equities going into August, September. I'm sticking with that and very concerned about. I do think that a dramatic 10-15% sell-off would not be out of the question over the next couple of months, and that's based on VIX continuing to do what it's continuing to do. And then I think you're also seeing the put skew, and I'm trying to look at three things at once here. But when you go to the TWIFO page and you take a look at the equities and you look at the options on the E-mini S&P 500, now I'm speaking slowly while it loads. But you are seeing, pretty nice skew to the downside because there are a lot of concerns about the markets. Yeah, especially it suddenly popped up. You've got some really nice when you go farther out, you've got double digit put skew going on, and a lot of activity in the puts as well. Gosh, looks like every big trade going out to goodness gracious, almost all 8 of the top 10, the 10 most or closest contracts. It looks like puts are the most active, which you would always expect, but that's pretty tilted to a lot of people being worried about the markets.
Yes, even when you filter out the nonsensical noise, like the folks picking up their nickels on the 3,700 puts as they do week after week, even when you filter out that nonsense, still a lot of puts hanging out there. And I do like your point about the skew because you're right, it is getting juicy. People always assume, Mr. Rhoads, when they see vol right now hanging out at or near 52-week lows, first, second percentile out there, they just assume the put is non-existent. The skew is non-existent. And yet we are starting to see more of that put juice start to creep in there. So even though vol is still in the lower percentiles out there, we have seen skew tick up into the 25th percentile and even beyond. In fact, let's just pull it up right now and look and see. Yeah, we're hanging out right now. 30-day skew is at about the 31st percentile. So I take it back. It is 31%. It is at the 84th percentile. Looking back on the year, whereas at the money vol has ticked up obviously a little bit as well, but it's only at about the 17th percentile. So just because at the money vol is still looking light doesn't mean the skew can't get a little bit twisted. That's what skew does at the end of the day. In fact, as Mr. Rhoads was alluding to, the narrow dated contracts, the 1 day, 2 day to go contracts, the puts, the vol is about a 17 and then out about a 12. You go out 4 days. The puts are about 12% bid over that. We go out a little bit, though. Let's go out, let's say, a whopping 20 days. And now our vol is at about a 13.5. And the puts are 18.1% bid over that. So you start to see a little bit of creep in those puts lists. As we go out to September, and now we're looking at about a 13.25 vol. And the puts are about 21% bid over that. So starting to get a little bit media. Go all the way out to October, 25% bid, and the at the money vol is about 13.5. So again, that bid creeping into the puts, and again, given what Mr. Rhoads was just saying, maybe looking at the potential for a pretty aggressive sell-off, which in and of itself is interesting, Mr. Rhoads, because I know you've been kind of on the bullish tip for a while. I guess you're exhausted now. You're an exhausted bull, sir.
Well, I switched to neutral back in late June. Where I was short the I was short the S&P 500 and long the Russell 2000, and that gap filled it didn't fully fill itself, but the Russell outperformed the S&P 500 over the course of most of July, and then I kind of got out of that, and now I'm short S&P futures. So yeah, I've totally gone from bullish. I think last time I was on, I was kind of neutral. And now I sold all the stocks in my IRA and I bought S&P futures.
Interesting. So you're just straight up short.
I'm an open freaking book.
So you're just straight short the futures. You long some puts. What are you doing? Put spreads. What do you got?
I am long some NQ puts, and I am short I periodically been selling the shorter dated puts against those long NQ puts. And then also I just have a pure short position in the S&P 500.
Look at you. Swinging for the fences to the dark side. Wow, Mr. Rhoads.
Although I still own some SBIX. I know we're totally talking about the wrong products right now. So.
Just going to say, what about all your I thought 99% of your holdings were, so this is the other 1% that's all short.
I have a very small, I'm going to continue to own it, but I'm 20% of my full position now.
I think you've probably overwritten enough calls to get you taken out of that one now, I would think.
That is what has been happening.
Hey, there are worse problems to have than getting your underlying taking away at exceedingly higher levels, sir. But intriguing stuff, Mr. Rhoads, switching to the dark side. Interesting, listeners. Bear that in mind. We got time for one more complex, Mr. Rhoads, before we get some comments and questions out here. So where do you want to go next, sir?
Oh, I'm going to where is it? There's the TWIFO thing. We could do. You want to? I know you're gonna get so upset with me, but right before the show came on, I was watching Bloomberg News, and apparently there was a 30-year auction that did not go well at all.
So you want to go to the land of the rates? Okay.
Yeah, you don't like when I go to the rates, but because something happened, I was going to say let's go to the rates. I guess the 10-year is the one that's always the most active one, so we can.
10-year is usually the sexiest. All right, the complex that isn't known for being the sexiest, but occasionally can surprise us. It's time to hit the rates, listeners.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, listeners, let's go out to the world of rates. We were just in equities. Let's pop out of that, scroll down 2 more slots to interest rates. Then we're going to go in product family U.S. rates. And then from there, we usually hang out in the 10-year, but Mr. Rhoads looking at the 30-year this week, so we could certainly hang out there. The 30-year, a less active contract, as you might expect. It's a 30-year contract. About almost 500,000 contracts on the tape, 477,000 contracts on the tape. That lies in a little bit of stark contrast to the 10-year, which is about 2.1 million contracts out there. So a little bit more active, but we can hang out in the 30-year. Mr. Rhoads, a lot going on in the world of auctions out there. What was catching your eye today, sir?
Well, the auction didn't go particularly well today, and when that happened around noon, the future lost almost a full point, which is a big freaking move it was a really big move for the commodity future. I mean, it basically dropped a full point, went from 122.5 to 121.5 in about, it looks like about 10 minutes there, which is a pretty large move. I just wanted to explore a bit. It looks like puts are slightly bid, not as much as maybe you would have expected if the market did a good job anticipating that we were going to get a bad auction. When we did get the bad auction and things started to sell off, someone did come in and sell a bunch of the 118 puts for perspective's sake. The futures around, like I mentioned just a second, about 121.5 or so. But I see some put spreads where somebody sold the 118 puts, bought the 114 puts in reaction while we were getting the reaction that I just talked about. And since we've been on the air, somebody's done something very similar with the 118s and the 119s. The 118, 114 was using the October contracts. The 119, 118 is using the September contract, which is the front month contract. And then another big lot of a bullish put spread with the October options again, doing the 118 and the 114s, taking in 38 ticks and paying 13 ticks. So what's that come to? 25, 30 seconds for the, or 25/64ths, sorry, 25/64ths for this one. So a little under a half a point for a 4-point wide put spread that's 2.5 points out of the money. 3.5 points out of the money. I got to stop doing math in my head.
Look at you putting that Bloomberg terminal to work, sir. I love it.
I'm loving it. And we got to use it.
You got to get that value out of it.
Expensive.
Tell you what, I'll book you on everything every week so you could just get your value out of your Bloomberg terminal. How's that? Then you can write off the whole thing. We joke, listeners, the rate's not the sexiest of things because, the vol usually pretty anemic. That said, ticking up a little bit this week, as you might expect. We're at about a 13.5 at the money vol in most of that front portion of the term structure. So compared to what we see a lot of times with like a 7 in some of the other contracts you look at in the rates, 13.5, nothing to sneeze at out there, ticking up about half a point. So that's actually a pretty big vol move out there this week. Mr. Rhoads mentioning some put spreads and things. Looks like the biggest volume contract this week was in September. It has about 15 days to go. It was the September 126 calls. As you said, we're hanging out about 121.5, a little bit below it, about 121.20 right now. They did nearly 19,000 contracts this week, 10,000 almost on Tuesday, mostly opening, 6,000 on Wednesday, slightly closing, so folks, it's like bailing after the big day on Tuesday. About 3,000 today, only a few hundred on Monday. So a lot of back and forth on these 126 calls. And then right behind it, we have, looks like the 123 calls and the 120 puts kind of doing even numbers. Almost 13,000 of the 120 puts. The big day today, 8,400, 3,000 on Tuesday, about 1,000 on Monday. It's like they were mostly bailing on these throughout the week. And then right behind it, about 12,500 of the 123 calls. These trading pretty actively all week long. 4,300 yesterday, 3,800 on Tuesday, 3,500 today, and a little under 1,000 on Monday. Looks like mostly opening throughout the week as well. So a lot of interesting, more call paper than you might assume, given the aggressive nature of the downside move we saw earlier in this week. But intriguing stuff nonetheless. But what's always intriguing, listeners? It's your comments and your questions. Let's get to those now. A little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, let's do it. Let's dive on into some of your feedback. We'll start things off with this comment from Norman Walford. He just chimed in on one of our episodes. He said, "You're always informative and insightful." Thanks. Well, thanks to you, Norman, and everyone else who takes the time to like us, share some fun feedback out there. We appreciate your appreciation of the show. So right back at you there, Norman. Everybody takes the time to listen and comment and like and all that other fun stuff. I mentioned at the top of the show, we have a question of the week right now going on about the meme stocks. Not really germane to this show, but check it out if you want to see what our audience is voting. Is the meme stock frenzy back? Yes or no? I more wanted to get the once and future Dr. Vic's thoughts on the results of our question of the week from last week, because it's right up your alley, Mr. Rhoads. We asked him last week, we said, VXX had a rocky year in 2022. Are you trading it again or have you moved on? VXX, of course, listeners, the product that attempts to replicate a VIX futures position, has some interesting fun doing so along the way, impacted by rolls and all sorts of other fun going on the VIX futures term structure. They had some issues last year. Barclays kind of causing some problems. A lot of people got mad at that. So we asked them, gave them 4 choices. They could choose, yes, I never stopped trading it, or yes, I stopped, but they lured me back in this year, or no, I don't trust it anymore, or no, I trade other products. And Mr. Rhoads, nearly 2/3 of our audience choosing the no category, with 42% saying, no, I trade other products now. And then 22.6% for number 2 saying, no, I just don't trust it anymore. So I'm curious, as the once and future Dr. Vix, does that surprise you that so much of our audience have washed their hands of VXX, or is that kind of what you expected?
No, it doesn't surprise me at all. And I love when I hear confirmation of smart things that I hear from other people. I went over to New York for a NASDAQ-sponsored event where they had managers of actively traded ETFs. And somebody asked the panel, they said, they were talking about SVIX, which, I had to work in one way or another. But they were talking about it's had quite a year. It's up, it's up over 100% periodically. It's up less than 100% now. But the question to the panel was, why is it only got $75-80 million when they're putting up strong numbers? And the first word out of one of the panelists' mouths was trust, or lack of trust. So it's just, I think the 2018 thing is still hanging over those. I don't think the structural problems that VXX had, where the price of the fund disconnected so much from the net asset value that when I did weekend reviews, I had to use the net asset value. I couldn't even use the market price. Was, I would see VXX's market price week over week change, and it would be so different than the other the other funds that do the same thing as VXX. So I had to actually start using the NAV for a while till it got back to normalcy. But like VIXY and SPKX, they were having the kind of performance that you would expect, and VXX was not. They seem to have solved that problem, but you and I know this from the option industry, talking to individuals that had bad experiences with options. It's you have a hell of a time getting them back, and I think the same thing has happened to VXX.
Yeah, I very publicly washed my hands of it. They're trying to lure me back in. I haven't really been lured, even though it's starting to do what it's supposed to do again. So it might. But again, you got to have that caveat that Barclays could go crazy at any time again, and this product could go off the rails. Since we're talking about weird products in the vol space, this one came in a little while ago, but most of our guests can't really comment on this kind of stuff. But since you talked the vol space, it's a good one for you. This comes from A. Dante. He says, hello. Well, hello, A. Dante. Very interesting program. Well, thank you. Very interesting email. Right back at you. He says, I noticed that the ProShares is reverse splitting many of their ETFs, including UVXY 10 for 1. Yes, they did do that recently. And BOIL. Yes, BOIL, the ProShares Ultra Bloomberg Natural Gas ETF. So that 5 times fast. I know you discussed UVXY on volatility views, but what about BOIL, which they reverse split 20 for 1? Their natural gas ETF. Are you fans? And what impact will this reverse split have on the trading of it? Does it make it more viable? And you're not familiar with this one, listeners. This is a levered ETF, so it seeks the 2x of the daily performance of not quite the futures. Is actually indexed to the Ultra Bloomberg Natural Gas Index. Say that one 5 times fast as well. So they're trying to do 2x levered returns of that index. They even say in the prospectus, not intended to track the performance of spot natural gas. This one, as you might imagine, it's been a turbulent year for nat gas. It's been a turbulent year for BOIL as well. It hit its crazy highs, looks like last year, right around, let me go back here. There we go. Back in, looks like the August timeframe of last year. Of course, this weird split adjusted numbers out here right now that are kind of throwing things off. If you look at this chart, it hit a high of 2357 back on August 22nd. A dubious day, listeners. And then it's off 1,632 handles, or 95% since then, trading a 70 a handle. Of course, it has reverse split 20 for 1, so that's kind of gumming up the works out there. But Mr. Rhoads, you and I have lamented in the past on vol views about UVXY getting maybe too anemic of a reverse split. They probably needed to do 20 for 1 or something like that to really gin up more interest in this one, because that one's still hanging out sub 20 now. But what are your thoughts? I kind of just threw this one at you out of left field, but do you have any thoughts here on BOIL, the 2x levered nat gas ETF, and your thoughts on perhaps the impact or lack thereof of this 20 for 1 reverse split?
Well, it looks like they brought some option traders back into the scene with the reverse split. I like that they reverse split it up to a price that, isn't going to return, if things go against them, isn't going to return to the single digits in about 4 weeks. It'll take them a little bit longer than that to get down there like that. I'm going to tell you were wrong about something. You kept talking about natural gas and how the highest implied vol we talk about today was with it. This thing's the at the money 30-day implied vol is about 86. All
right, so a levered nat gas adjacent product. It's still in the nat gas family.
I know, but I was looking at the skew. The skew's pretty even on this thing right now, but maybe a little bit to the upside. But not enough to say not enough to go, hey, it's telling us something here. I didn't look at the block trades yet. If I find a collar, I would not be the least bit surprised. No collars on this one today. But if you're trying to take advantage of volatility, if you say you're a volatility manager, move away from that equity stuff. There's all kinds of fun stuff out here. And this is definitely one, especially the leveraged ETFs. You can find all kinds of interesting opportunities in the leveraged ETFs versus the non-leveraged ETFs, the options on both, et cetera. There's all kinds of great things that vol managers, I think, are not looking at.
Yeah, I'm looking here. You're right. It does seem like the ADV has had a bit of resurgence, up to 17,000 contracts a day. So that's certainly respectable out there. I mean, it's not 100,000 a day or 1 million a day, but it's enough to get some things done out here if you did want to trade options on these Franken products, as we call them out there, listeners. So intriguing stuff. You're at the 30-day vol, 84.1 out there in BOIL. So just bear that in mind. It is one of these Franken products, so these things have a nasty habit of decoupling at the worst moments. But as long as you're okay with that, you're not putting the entirety of the kids' college fund. You want to sling a little bit of options on ye old BOIL. I think a reverse split usually makes that more attractive for a lot of people out there. So it seems like the ADV is reflecting that. So I think if you were intrigued before, Dante, a 20 for 1 reverse split should make it a little bit more intriguing out there. And of course, looking at this long-term chart, obviously, a lot of premium erosion out there, as it tends to occur in some of these levered Franken products. So I'm guessing you're going to be playing to the downside, but hey, you never know. In these, I need to dive into some more of that of this roll and see exactly how aggressively they rebalance this thing to see exactly what's going on out there. But it's an intriguing one. People have hit us up about this before, but it's been a little while. Maybe we need to start adding Boyle back into the rotation. Mr. Rhoads, I love you coming armed with the Bloomberg terminal, sir. The Bloomberg Dr. VIX is a different beast. I like it.
Maybe we need to start a new show, Options on Leveraged ETFs.
Oh, there we go. Ooh. I wonder who would sponsor such a thing. All these folks out
there. The leveraged ETF people.
We'll call it the Franken Products Hour. What do you think? That'd be fun.
Dead Man Walk. It's the ETF industry growth. It's rolling over, man. Last week, 25 funds closed, only 7 new ones opened. So you're seeing some consolidation as well.
Some consolidation out there. And listeners, that music means we've come to the end of this fun show. Man, what a lot of living we packed into the show today. We touched on energy, even got some heating oil in there, lean hogs, got some rates, some equities, some Boyle. What more do you need? VXX, what more do you need in a show, listeners? I defy you to find another program that packs so much living into an hour. Unfortunately, our living is done, at least for today. But before we go, Mr. Rhoads, if folks are intrigued by all the stuff you're putting down, maybe they want to hit you up with some queries for your Bloomberg terminal, where should they go? What should they do?
The best place to find it is just my full name, russellrhoads@gmail.com, or, hit me on Twitter. I'm at Russell Rhoads. And you don't know this. Your producer and I have a little secret that I'm going to spring on you now. I'll be back at noon tomorrow to talk volatility.
Uh-oh. Double dose of Russell Rhoads in 1 week. I
invited to be on tomorrow at noon.
Oh, no. My producer making moves behind my back.
Of course.
How dare she?
Well, there you go. I think she has a soft spot for me.
I think she does. All right, fine. I guess I'll let her book the once and future Dr. VIX on the Vol show. I mean, I guess that's appropriate. I don't know. Yeah. I was thinking more crypto for you or perhaps the advisors. But hey, I guess you could slum it on the Vol View show with us as well. So if you want a little more once and future Dr. VIX, listeners, tune in tomorrow, noon Central, 1 p.m. Eastern, to get your dose of volatility views. And of course, you know where to go to check out all this data we're talking about and a whole bunch more. CMEgroup.com/TWIFO. TWIFO. It's a place to go to begin your journey to the dark side. Once you go there, once you click on that link, listeners, no promises. You're going to go down a rabbit hole. Probably going to be pretty fun. But that's where you should start, CMEgroup.com/TWIFO. Unfortunately, that's the end of our broadcast day today, but we'll start back up tomorrow with the once and future Dr. VIX, noon Central, 1 p.m. Eastern for volatility views. So all the stuff we're talking about levered things and UVXY and VXX, if you're scratching your head like, what the hell are they talking about? We get into a lot more of that on that show tomorrow. Afterwards, exclusively for you pro folks, coming back with options oddities to end our broadcast week. Of course, if you want to kick the tires on the pro for yourself, theoptionsinsider.com/pro, the place to go to learn more about that. And we're back again next Monday with the old OB all the way to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.